You guys, the Fed damaged the housing market for years to come. Keep watching. We're going to talk about how and why. So what's up, you guys? Michelle and Justin, and we are coming to you with our article review for this week. It was written by Bloomberg, and it is titled "The Fed's Damage to the Housing Market in Recent Years."
This is a heavy one.
Yes.
One that we're very passionate about, that we've talked about for years. And so I'm excited to get into it.
Me too. And you know what? We've actually talked about this a lot. So just to kind of give you guys a general synopsis of what happened. In spring of 2020, the Fed started to lower interest rates. And by the time it was spring of 2021, they were crazy, crazy low. The housing market took off. We saw the fastest appreciation ever in recorded history, and they kept them low. Now we're going to talk about why that was bad that they kept them low, and it was also bad how they raised them so fast this year.
Yes, and then there's a third factor with
Yes.
quantitative easing and mortgage-backed securities that we're going to jump into.
Absolutely. Okay, so I'm going to read the first part of this article to you guys. With interest rates currently hovering around 5%, existing home sales are down more than 14% from last year. Some potential buyers sit on the sidelines until rates, prices, or both drop, while sellers hope that the market will rise again so they can get a higher price. So, Justin, we've talked about this before. What the Fed did with interest rates really wasn't a wise idea. They did it to prevent complete economic collapse after the pandemic. But as a result, what do you think it's done to the housing market?
Yeah, so again, at the time, March, April 2020,
Yeah.
it was a scary time.
Yeah.
We were getting shut down.
Yeah.
Lockdowns were happening. Kids were getting taken out of school. It was pretty nuts.
Yes.
So, they had to do some things to help stimulate the economy, to bring some faith that everything was going to be okay.
Yeah.
And lowering rates was the right thing to do
Absolutely.
at the time.
Absolutely.
We totally agree with that. I think most people agree with that.
Mm-hmm.
This rate continued to lower
Yes.
more and more and more and more and more.
Yeah.
And then January 2021,
Mm-hmm.
booming happens.
Bam.
Right?
Yes.
And February, March, April, May. I mean, we literally saw just crazy amounts of appreciation
Insane.
in that time. And this is when you and I
Mm-hmm.
were like, they need to lower interest rates.
We did. Even as realtors, even though our phones were ringing off the hooks and we were having, awesome success.
year.
Yeah, we still said that. We said to ourselves, this could be bad. If they don't get control over these interest rates, we're going to pay for it.
Yep, we're going to pay for it. And we can afford it, right?
Yeah.
People could afford it at the time.
Yes.
And we knew the prices were going too fast. So that's the picture that we're painting. So it's no wonder
Mhm.
that was kind of mistake number one
Yes.
that the Fed's made.
Yes.
Had they started to even just gradually
Mhm. Very
hire
slowly,
them
yeah.
in spring of 2021 or even summer of 2021, right?
Yeah.
Like it would have been so much better. People
Yeah.
wouldn't have panicked. People wouldn't have freaked out.
Mhm.
And it would have certainly slowed and helped inflation,
Yes. Yes.
which was one of the main reasons we're in this mess today.
100%, exactly. And they didn't need to raise them up to what they are right now. They could have just very gradually done it just to control it. And it would have also kept housing a little bit more affordable, or should I say a lot more affordable for a lot of people.
Yeah,
So,
and that's what I imagine. They're just in 2021, just think if they would have kind of risen them to the mid threes, high threes, we could have been at about high threes or 4
yeah,
for most of 2021 or the second half of 2021.
yeah.
People would have still been buying homes,
Mm-hmm.
but yet building would have calmed down, a lot less lumber, a lot less supplies, a lot less everything,
Yeah.
and people could have been able to figure this thing out much easier.
Yes.
So, mistake number one.
Yeah.
Mistake number two is mortgage-backed securities.
Yes.
Okay.
Yes.
And the Fed, I'll read this part here in yellow.
Okay.
The impact of the Fed's intervention can be felt for years. In the spring of 2020, the Fed was desperate to avoid an economic collapse. So it returned to its 2008 strategy. He cut rates to zero. They cut rates to zero and brought back quantitative easing by buying long-term government bonds and mortgage-backed securities.
So, you and I have talked about this, Justin. So we both agree, right, that in the spring of 2020, that was the right move, was to do the mortgage-backed security. They 100%.
Buy them up, because when those mortgage-backed securities get bought up by the federal government, it gives these banks and it gives other investors confidence that they can keep lending and doing their thing, because they've kind of got a partner in the background that's backing them up and helping them.
Exactly. So, I mean, as far as we're concerned, the Fed did make mostly right decisions. Their problem is their timing was terrible.
Yeah, because they kept buying for too long.
Yes.
Again, take you back to the summer of 2021. We had an amazing spring. People had a ton of money. You can stop buying mortgage-backed securities, but they continued to buy them and buy them and buy them and buy them, to eventually getting to the point where they own almost half of all mortgage-backed securities. It's at 40%. So now, this is where it gets a little bit interesting, because your 10-year bond, they look at the mortgage rate and then base it on the 10-year bond and additional risk premium. The size of the risk premium is largely determined by the mortgage-backed security. So whenever the Fed owns a lot of mortgage-backed security, interest rates don't go down as much.
So what this article is saying is that because of those mortgage-backed securities being owned so much by the Fed, that it's going to keep interest rates high. Right?
Potentially,
yeah.
Yes. So there's debate whether quantitative easing works or not. Again, we think it was a good thing at the very beginning of 2020 when the pandemic was happening, but they should have definitely cut it off in 2021, preferably the spring or even before the spring even happened.
So same thing with rates. They should have risen them a little bit slower in 2021, and they shouldn't have had to raise them so quickly this year. So again, timing.
So this is the part, the Fed wants to reduce the size of their mortgage-backed security portfolio, but they can't until those securities are paid off. So now we have higher interest rates, meaning fewer people are going to move, fewer people are going to refinance.
100%.
And so the mortgage portfolio owned by the federal government is not going to shrink as quickly as they want it to, because who wants to move from a 2.9% rate
I don't.
to a 5.5?
Exactly.
That's a big deal for people.
Or refinance. Why would you refinance?
There's no reason to, right? So it's going to keep a lot of people stagnant from doing this. So very, very interesting stuff. If you guys want to check out the article or have questions, feel free to let us know. Final thoughts, though? What are your final thoughts?
My final thoughts are, the Fed did what they had to do, but they got to improve their reaction time, and they got to improve their timing.
It is sad that we can see it, right? And like 90% of the public could see it at the time. And they just... They kept doing it. This is one of the biggest blunders I've ever seen from them, and I'm so shocked. And inflation is the reason, because the rates were so low, because prices went up so fast, and it was directly related to the interest rates, directly related to how much mortgage-backed securities they bought. Maybe the economy was in just such a more terrible place than we even imagined,
100%.
but I don't think so. I saw so many people finishing their basements, buying new cars, buying new boats,
new trailers. I saw that a lot.
Like people had money. So I don't know why. I mean, honestly, there is one potential reason, whether you like it or not, but Biden had just gotten elected, put into office, and I don't know, maybe there was some sort of thing there that they wanted to make sure that everything went super good instead of
100%.
crappy.
Whenever there's a big election, I feel like whatever, not to get political, whatever party's in office wants to make things look as smooth as possible.
Wasn't planning on talking that, but it came out, so whatever, it is what it is. We'll see you guys next time.
Okay, like and subscribe, you guys.